All right, so let's quickly look at the cash flow statements database, which effectively is like an accounting database. So there's this quality of life button which allows you to open your funding rounds very quickly so that you can very quickly check um, where your money is coming in from in terms of the funding. You'll be able to see it quite easily in the cash inflow as well because this is linked directly to external funding. You might have noticed that there's another tag, and this is the revenue tag. So the two main income sources you will have is external funding and revenue. So in terms of revenue, you have a list of sub items. So you can assign each month's revenue from your sales or any other source, and you can tag it directly here. The advantage of doing it this way is all of your incoming is captured in one database. And if you quickly sort over to these tabs, you can also see just your fundraising and the type of source of your fundraising, like a grant or an equity fundraise, and also your incoming by revenue. So the cool thing you can do here is um, because of the fact that this is using sub items, you can't actually sum the revenue over here. So if you see here, it's showing zero, but you can sum it in a tab which only has the revenue and it's like the sub items of the revenue source. So you can see how much incoming you have for a particular period. And this is basically the other tab, which is calculating your net. So one of the things you will also notice is you can directly tag expenses to your source of funding, and this is kind of powerful because you can have certain set of funding which don't allow you to spend on certain things. So for example, we have a few grants which are like, oh, you can't really spend them on equipment, but you can spend them on hiring, right? So you can very quickly add your expense details to each of the funding source. And if you remember the dashboard, all the way outside here in the finance accounting cap table template, this dashboard here is basically using this information. So what it does is it takes in your incoming information and your tagged expenses. It calculates what you have left in each funding source, and then you can see remaining funds and funding value, and then you can see what percentage approximately you have left. So let's quickly go back into the cash flow database. Um, of course, below the funding, you have the expenses. So you can sort your expenses by tags, which is legal, sales and marketing, or website. You can customize these tags as per your requirements. The other cool thing you can do, and I'm going to quickly move my camera over the side so that you can see, is there's actually templates here which you can set up for recurring expenses. So one of the things I did with subscriptions is you can set up a recurring expense template which triggers every month, for example, um, and this automatically becomes a subscription. Um, and even your salaries for each of your employees can be set up as a recurring template. So you don't have to manually add this every time. And this is working in a way which is very similar to your revenue system, by which I mean you have a master item and sub items, right? So all of your salaries get bunched into one, all of your subscriptions get bunched into one, and you can see your recurring expenses, for example, your subscriptions all together, and you can very quickly sum them up if you want to. So that's basically it for the expenses database. The cool thing is, again, like you will be tagging these to your income source so that you have a good idea of what's left over. The other cool thing you can do is you can track appreciation, depreciation of your assets. Equipment like a computer would have a appreciation, depreciation rate which is negative, so it reduces in value over time. Your real estate could be like a workshop space, right? So that could increase in value based on how the property market is behaving. So on average, let's say it's going up by 3% per year, and You spend 100K on investing in that database, you now have a asset which is growing from what value it was before. So one thing you can do is you can add your purchase date. So it will calculate the age of the asset. Um, so you can add it right here in this database, and based on these numbers, you will see that it will calculate your asset value, like the book value of your asset at the current date. So your computer is now 237 days old and it's dropping at 15% per year. Actually, should probably be more. So assuming that this is true, it's now worth $1349 dollars, for example. Whereas your asset is 70 days old and it's going up 3% per year approximately, so it's now worth slightly more than what you invested in. Um, Similarly, you can also track your liabilities. So this one is linked to your funding round. Most of the times, your liabilities are going to be either debt or assets owed. So let's say you owe something to your supplier, so you can list them and you can tag them directly over here, and it will populate it with how much value you're owed. For example, like you saw that the venture debt was $100,000 debt that you took at a 7% interest rate for 2 years. So this will tell you, oh, you need to pay back this amount. And that's basically it. The final little database here is, if you remember seeing the runway on your home screen, this is the database that does the job. So basically what this is trying to do is it's trying to approximate your runway, assuming you have no income. So this has taken in all of your incoming revenue up till now, and it's taking in all of your recurring expenses. So this is all of your outgoing till now. So it's using the difference to calculate what you have left, and then it's using just the set of recurring expenses that you have to calculate this amount. So it will divide the amount you have left by the burn rate, which is your recurring expense, assuming that you have no income at all, and then it'll populate this number here, which is at the current burn rate of 12.25K per month. With what I have left in my bank account, the company can survive for 53 months, which is a pretty good deal. So you're healthy, right? And this will show up on your central dashboard in your finance statement. So that's basically